Ticker symbol NN. It's hiding right in plain sight, but NextNav might just be one of the most fascinating multi-billion-dollar real estate plays on the market today. Let's get right into this explainer.
Okay, so on paper, NextNav is an advanced tech company. They provide what are called terrestrial positioning, navigation, and timing solutions, often just referred to as PNT. Basically, they've built a ground-based backup to our incredibly vulnerable space-based GPS system. But that is really just the cover story. Look beneath the surface, and this company functions primarily as a highly asymmetric spectrum asset play. They literally hold a monopoly over a very specific slice of the lower 900 MHz spectrum.
And this perfectly highlights a massive disconnect in the market right now. When everyday retail investors look at NextNav, they just see a pre-revenue, cash-burning PNT software startup. But what do institutional funds see? They see a nationwide 5G spectrum monopoly. Think of it like real estate. Right now, NextNav owns these massive, vacant lots up in the sky. Sure, they aren't collecting any high-rise rent today, but they're just sitting on their hands waiting for the Federal Communications Commission, the FCC, to basically rezone those lots for 5G skyscrapers.
Which brings us to a staggering number, $1.89 billion. That is the current market capitalization of this company as of August 2026. If you're just looking at a standard stock screener, it's almost impossible to figure out how a company with their current on-the-ground operations commands a price tag of nearly $2 billion.
Well, the mystery actually gets a bit deeper when you look at their estimated revenue for 2026. It's just $3.8 million. Put those two numbers together, and you get an absolutely absurd enterprise value to sales multiple approaching 500x. That means the market is valuing them at 500 times what they actually sell. Any traditional value investor looking for cash flow is probably scratching their head right about now.
And those traditional metrics? Yeah, they get worse before they get better. Their return on capital employed is sitting at a negative 77.8%. So the absolute crucial takeaway here is this. Your standard fundamental metrics, your discounted cash flow models, PE ratios, they are completely useless here. They tell us absolutely nothing about the real value of this asset.
To really grasp NextNav, you kind of have to read it like this quote from the research. NextNav functions as a call option on spectrum monetization. See, investors aren't buying the current business, they are buying a binary, regulatory call option. They're just waiting for the FCC to act. The economic moat here isn't the software. The moat is the spectrum portfolio itself. NextNav is the largest licensee in the lower 900 MHz band, and if the FCC approves their pending petition to reorganize that band for flexible 5G use, man, this spectrum transforms into a multi-billion-dollar barrier to entry.
The sheer brilliance of their strategy really comes down to the math. NextNav is asking the FCC for 15 MHz of full-power flexible use license spectrum. But get this, they only actually need about 5% of that bandwidth to run their national security PNT backup network. So what about the other 95%? Well, that gets leased out to Tier 1 mobile network operators. We're talking the big guys, AT&T, Verizon, T-Mobile, giants who have an insatiable demand for clean, low-band spectrum to fuel their broadband expansion. So NextNav builds this tiny backup network to hit a national security imperative and then cashes in on the remaining 95%. But of course, everything relies on a very specific timeline. This is the big regulatory catalyst that's either going to unlock billions in asset value or, honestly, completely crush the stock. Back in April 2024, NextNav officially petitioned the FCC, which led to a notice of inquiry. Then, March 2026 brought a massive step forward. A draft Notice of Proposed Rulemaking, or NPRM, was officially forwarded to the White House Office of Management and Budget. So now we are looking right down the barrel of a final expected ruling sometime in late 2026 or 2027.
Now, it's never really that easy, is it? You can't exactly petition the government for a multi-billion-dollar windfall without someone fighting back. And there is an intense conflict happening behind closed doors right now. The alarm, life safety, and Z-Wave industries are spending massive amounts of money lobbying against this move. Groups like the Security Industry Association and the Monitoring Association, well, they're claiming that firing up high-power 5G in this specific band will cause catastrophic interference to millions of legacy smart home IoT and alarm devices. Some critics are even accusing NextNav of engaging in national security theater, basically arguing they're just using this whole GPS backup narrative as a Trojan horse to secure a massive spectrum payday.
And let me tell you, fighting a lobbying war like that is incredibly expensive. Just take a look at the financial reality as of Q1 2026. Revenue was a mere $1 million, but the net loss, $10.6 million, and operating loss was $19.3 million. NextNav operates with a very heavy cash burn. But these negative margins are literally just the necessary cost of doing business when you're forced to fund aggressive terrestrial network buildouts, deep R&D, and relentless legal and lobbying efforts over at the FCC. So the immediate question naturally becomes, can they actually survive the wait? Well, fortunately for them, they are sitting on a pretty impressive war chest of $143 million in cash equivalents, and short-term investments as of March 2026. If they're burning $10 to $15 million a quarter, this gives them a very safe, substantial financial bridge to carry them all the way through 2027 while they wait for that final FCC ruling. They also pulled off a huge strategic victory recently to clean up their balance sheet. Back in June 2026, they completely erased a massive debt overhang. Because the stock went on a huge run, it actually triggered a 160% price condition, and that allowed NextNav to force the redemption of their debt that was originally due in 2028. So by forcing that debt to convert into equity, they essentially wiped out their immediate liabilities and radically cleaned up the balance sheet right before this final regulatory push. Okay, so let's walk through exactly how Wall Street is valuing this asset today. It's essentially a sum-of-the-parts valuation based entirely on that spectrum. Step 1, take the 15 megahertz of requested spectrum. Step 2, multiply it by the US population, which is roughly 335 million. Step 3, apply a historical clearing price. If you look at past auctions like the C-band, they cleared between 70 cents and $1.50 per megahertz pop, which, by the way, is just the industry metric combining bandwidth and population. If we use a conservative 75 cents, that equals $3.76 billion in total asset value. But remember, the FCC hasn't actually approved it yet, so step 4, apply a 50% regulatory uncertainty discount, and what do you get? $1.88 billion. That perfectly mirrors today's market cap. The market is literally pricing this in as an exact coin flip. Looking at the current technical setup, the stock recently hit a high of over $24, but has since suffered a near 43% drawdown. It's currently trading around $13.99. Major support sits pretty solidly in the $12 to $12.50 range, which is where buyers stepped in heavily during July of 2026. Resistance is up at $17.50, and then you have the big psychological 20 mark. What we're really seeing here is a classic accumulation phase. Speculative momentum cooled off simply because the broader market got a little impatient waiting for the FCC timeline to play out.
But here's the thing, despite the long wait, smart money hasn't left the building. NextNav is highly favored by event-driven and special situations hedge funds. Funds like Laughing Water Capital have publicly cited this as a top holding, specifically because of that asymmetric risk profile we talked about. Plus, Wall Street maintains a consensus buy rating. Even after analysts trimmed targets to account for slightly delayed timelines, the average analyst price target is still sitting way up there at $33.67. To truly grasp the core of this explainer, you really have to look at the stark, binary reality of these three scenarios. The bull case takes us soaring to between $33 and $40, assuming the FCC grants the full 15 megahertz flexible use spectrum. NextNav unlocks billions in asset value. Then you have the base case, which puts us at a solid $15 to $20 if the FCC proves a modified version, maybe forcing them to share the band or restrict power to protect those legacy alarm systems. But then, look at the bear case, $3 to $5. If the FCC completely capitulates to the lobbyist and rejects the petition entirely, NextNav is left with a low-revenue software business, a massive cash burn, and the valuation just utterly collapses.
Because of that extreme binary nature, the investment verdict is a strictly speculative buy. Listen, this is entirely unsuitable for conservative dividend investors or, a standard dollar-cost averaging strategy where you just buy a little bit over time. No way. If you participate here, it demands very strict position sizing, 1 to 2% maximum allocation of an active equity portfolio. You absolutely have to size this for potential binary destruction or massive expansion. And that leaves us with the ultimate question. The current pullback to the $13 range definitely offers an entry point ahead of the late 2026 or 2027 ruling. But it all boils down to the raw mechanics of risk versus reward. Are you willing to risk $9 of downside just to capture $20 of upside? That is the true cost of this asymmetric call option. And honestly, it's the only question that matters for anyone looking at NextNav today.